Hi, welcome to the Earnings Eruptions video course. I'm Brian Neal, founder of Tradetobefree.com and InvestBefree.com, and this is my favorite day trading setup. I've day traded probably over 5,000 trades in the past couple years on top of my swing trading and looked at dozens of different techniques, and I found this to be by far the most successful trading setup in the current market. And this is all about profiting big on monster earnings beats. And a lot of people want to, pick those stocks that have big earnings beats beforehand, and that's one way of trading the market, and it's not bad. The only problem is that usually you don't have the big earnings beat, even if you pick the right stocks. This is a way to take advantage of those big earnings beats after they happen, when we know that the big move is coming or very likely to come, and how to trade those earning events for maximum profit and a very high probability of success. Unlike when you try to trade ahead of it and you guess whether they are going to report a big surprise, that usually doesn't work out that well. And there's actually a better way, and that's to trade immediately after the earnings beat, if the earnings beat meet certain criteria, and if the stock meets certain criteria as well. And I'm going to explain the whole strategy to you in this course. And first I want to give you an overview though. Again, every season, earnings season, there's dozens of stocks that have big earnings beats. Most stocks don't have the big earnings beats, each quarter, but there's a few that do. And I'm going to show you how to make big profits off those earnings beats. And again, this is probably the best day trading strategy in the market for stocks over $10, and much more reliable than trading stocks under $10 and penny stocks. Unlike stocks under $10, this trading setup is less risky. You have a higher chance of success. The success rate approaches 80% or better, much better than other short-term strategies in the market when you follow the following rules very carefully. And it's also a strategy that's not dependent on the overall market direction, because of the strong catalyst and the short duration of the trade. A lot of swing trades rely on the direction of the overall market if you're holding the stock for more than a few days. And even if you hold the stock for 2-3 days, the overall market volatility can really come into play. But with this trade, it's not really a factor nearly as much. And in nearly all markets, you can make money off this trade. And I want to point out too, before we get going, is that you don't need expensive trading platforms. You don't need a faster internet connection. You can keep the one you have. You don't have to have expensive training for months or years. With a lot of day trading strategies, you do. And this strategy can work even with a very basic trading platform. And I'm also going to show you how to use this with a Robinhood broker, which currently doesn't charge anything for commissions. That's very, very valuable to know, especially if you want to start with a platform that doesn't charge you for commissions. And you will not need risky penny stocks, options, or margin. Occasionally you do have a lower price stock that falls into the criteria, and I'll talk a little bit about that too, but generally these stocks are in a higher price range and much less risky. And you don't need to be a large chat room moderator to make this strategy work. Now, there's a lot of chat room moderators out there that can do very, very well, but some out there will actually use their chat room to actually pump the stock as they sell into the rally. So their numbers can become inflated by doing that, and you won't need that to make this work. The strategy is also more scalable to larger account sizes and other techniques that rely on volatile penny stocks. And usually you're in and out of the trade within a few hours, often within an hour. I'd say most of the time you can be out with 3 to 5% within an hour. And the typical profits are 3% to 15% in a very short time frame. And some of these run 30% or more within a few days, or even the same day. And again, with more reliability and less risk than stocks under $10. Okay, so what is it? What's the strategy? All right, well, first thing we want to do is we want to find stocks gapping a lot higher on a very strong catalyst. And normally this is a very strong earnings beat and a raise in guidance. But a lot of other news events are basically pump and dump. And what happens is that, a lot of people may jump into the stock, but often in those lower price stocks, they turn over very quickly and you're left holding the bag. And we want to avoid those situations. Now, if you look at really strong earnings beats with a raised guidance, the stock has the underlying value now to hold those higher prices. I'm going to show you how to qualify these trades, qualify the earnings beat and the raise in guidance, and to ensure that you're buying a stock that can hold those values and trend higher from there. And again, we're looking at stocks over $20. We want one with a lower float or high average volume relative to the float, and I'll give you those exact numbers and the criteria later in the course. Okay, then we want to watch the pre-market pattern. This is very key. Okay, the pattern has all the characteristics specified in the course, and I'm going to show you that in detail. There's some patterns that are very bullish, and there's other patterns that aren't, and we want to avoid the ones that aren't. Okay, what you do at that point is just before the market open, if everything looks good at that point, we want to put in a starter position. All right, then we want to add more if it breaks the pre-market high, which it's likely to do if it meets the technical and fundamental criteria explained later in the course. Okay, and then we use a tight stop loss per the instructions in the course. Now this varies from 2.5% to 3.5% below the ideal entry point. Okay, so we have a very tight stop loss with this trade, yet we have a very big upside potential that is very likely to occur, anywhere from, like I said, 3% to usually 5 to 10%, and upwards to 15 to 20% or more. And then after we enter the order, we want to put a limit order in for 20% to 100% of your position, depending on how good of a start the trade gets off to. So if we have a really strong start, we want to take less off at the first target. If we have a slower start, we want to take more off, or the entire position off. Okay, then we want to stop the remainder at your entry point or a little bit below the pre-market high at the right time. All right, and then we want to add to the position if it gets off to a really strong start, and I'll give you the instructions for that to determine whether it's a really strong start or not later in the course. And we want to catch that first pullback, which always occurs, after this trade breaks out. And then we want to sell another third when the next rally breaks intraday, and then we want to keep the rest until another key technical event occurs, which I'll explain later. And really, there's multiple ways to play it depending on how much you want to make and how much time you want to spend on it. Okay, you could make a very quick 3% to 10% with a very high reliability of success within an hour typically. Or you can go for a 20% or more profit within a few days while raising a stop. And that's totally up to you. And then what we want to do is we want to rinse and repeat with the next monster beat, meeting all the criteria. The very exciting and very high percentage trade when qualified correctly. And like I said, after trying dozens of top day trading strategies taught online and thousands of trades, this is my number one day trading setup. This is not a swing trading setup so much, it's a day trading setup. So for swing trading, I look at other factors as well. But for day trading, this is one of the very few that really works. Okay, and it also works in nearly all market conditions. And again, you don't need a large chat room where you're the first one in to make this work. Okay, these aren't penny stocks. These aren't stocks that have, the pump and dump mindset and the way they play out. Okay, these stocks have the underlying fundamental improvement to hold those higher prices. Okay, you generally see a few good setups per month, especially during earnings season, which is ongoing nearly half the time during the year. Earnings season runs from anywhere from 5 to 6 weeks usually. Okay, so during that time is when you find most of these setups. You also find them sometimes outside of earnings season because there are companies that report outside of those 5-6 weeks. All right, so you do find them during the other weeks of the year. And it's a great trading setup to add to your arsenal. As many of you already know, the key to successful day trading or swing trading is having a few really good setups that you know really well, that you're good at, that are very high probability trades with a tight stop. Okay, and you can play these over and over again, and you can use the right setup for the current market conditions. And like I said, this one works in most all market conditions. These big earnings beats also lead to good follow-up swing trading setups and will give you an early indication of the longer-term prospects of the stock. And what I mean by that is that I've noticed that if this stock does very well out of this pattern, if it makes a big move, if it hits the entry point and doesn't pull back much, if it hits that follow-on entry point and makes a good move from there, if it behaves really well throughout the day trade, it often will move quite a bit in the weeks or months ahead as well after pullbacks. Okay, so there's really good swing trading setups that will emerge in the days and the weeks ahead.